Nobody making less than $400,000 will pay a penny more in tax under my proposal.
Well, yes and no. Hi everyone, Keith Wilson here, spreading a wealth of information. Today, I want to discuss the Biden tax plan and how it may affect you. There's a lot of stuff in this plan, but for now, I'm only going to concentrate on 4 areas of this plan. First of all, income tax. So you've probably heard that in this Biden tax plan, what he's doing, he's targeting high-income earners, specifically people with incomes of over $400,000. Now, what he wants to do, he wants to raise the highest tax bracket from 37% to 39.6%, which that really currently that consists of individuals with incomes of $518,400, and if you're married filing jointly, incomes at $622,050. But here's the problem. It's really not clear who that $400,000 income level is for. I mean, is it for the single taxpayers or is it for the married filing jointly? That makes a big difference, and as a planner, that presents a challenge. So at this point, we don't know. But hey, it's a 2% hike on that top bracket. Maybe not a big deal, but it's a big deal depending on if it's single or joint. The second area of the Biden tax plan is capital gains tax rate. So real quick, a capital gain is when you sell an asset like stock or mutual funds, land, real estate, or something like that, and if it's worth more than what you paid for it, that difference is called capital gain. For example, let's say you bought a stock several years ago and you bought it for $10,000, and today it's worth, I don't know, $20,000, and then you sold it. So that difference of the $10,000 is called a capital gain. Well, you would have to pay a capital gains tax on that, and the amount you would pay, it depends on your income tax bracket. Now, with the Biden tax plan, what he wants to do, he wants to increase the capital gains tax and qualified dividend rate to the maximum 39.6%. Now, that's up from 23.8%, but this is for people earning more than $1 million. Now, so far, you're probably thinking, hey, I don't make $400,000. I'm not in the top 1%. I don't make $1 million. So what's the big deal to me? But hang on, you're going to see in just a minute. So under the Biden tax plan, here's the thing. It calls for eliminating what is called the step-up in basis at death. So let me explain. Currently, everyone, not just the wealthy, who inherits, say, stocks, mutual funds, real estate, they enjoy what is called a step-up in basis at death. For example, let's say you inherited a stock portfolio, maybe from your parents or grandparents, and let's say when you inherited it, it was worth $500,000. But years back when your parents or grandparents started, maybe they started with $100,000, so $100,000 was their cost basis. So in this example, the gain is $400,000, which is unrealized, nothing's been sold, but currently the cost basis is calculated at what it's worth at death, not when your parents or grandparents bought it. And theoretically, if you inherited it and sold it on the date of death, there would be no taxes. But here's the thing with the Biden tax plan, that cost basis would be calculated by the original cost of the descendant, or $100,000 in this example. And you would have to pay the taxes on the gain whether you sold it or not. So really, by eliminating the step up in basis, this would affect everyone inheriting any type of assets. Now, while there are no tax cuts in this plan, there are some incentives and tax credits. For example, The child tax credit, he wants to increase it to $8,000. He wants to expand the new markets tax credit and make it permanent. In the Biden plan, it offers tax credits to business for adopting workplace retirement savings plans. It's going to expand several renewable energy-related tax credits. Also, it will reestablish the first-time home buyers tax credit. So those are the positive things. But what are the implications to you if this plan gets passed? Well, here we go. The proposed plan calls for tax revenue of something like over $3 trillion over 10 years, but Biden is calling for $11 trillion in spending over 10 years. So even though he says no tax hikes for those under 400,000, I mean, that spending's got to be paid somehow. So it seems that possible future tax hikes for those under 400,000 would be inevitable. And according to the Tax Foundation, look what happens to GDP. GDP would decrease by 1.62%, wages would decrease by 1.15%, and there would be job losses of 542,000. So there you go. These are just a few of the proposed tax law changes. A lot of it's really unclear. We'll just have to wait and see what happens. But remember, this is just a proposed plan. And any plan would have to be passed by Congress before it's made into law. And this is why, as a financial planner, tax law changes always present challenges and planning opportunities. Hey, if you'd like to see more videos like this discussing personal finances, hit that subscribe button below. I would really appreciate it. Thank you, and remember to be wise with your money.